Well, good old Robinhood is back at it again. Yesterday, with an over 1 hour long announcement, announced not only banking coming to you via delivering cash to you, but also some interesting advisory concepts. And I want to talk about Robinhood stock as an investment. So let's start there, and then I'll get into the announcements, because you may have already heard some of the announcements. Otherwise, we'll cover it in just a moment. The first thing that I like saying about Robinhood, when I look at the data for Robinhood, is I like seeing the unrestricted, unsegregated cashola, the cashola in the bank. Now, this company, in my opinion, has always been cash rich. We saw it when it was $7. They've been a cash rich company. I think they're pretty dang good at handling their finances. They also just don't have long-term debt. I mean, nominal over here. Other non-current liabilities are sitting at, 91 million bucks, but they've got 10 billion in current liabilities, but most of those being essentially segregated assets. So assets that you owe your customers because they deposited them with you for cash deposits or yield or whatever. The broker-dealer world makes it a little harder to analyze how much cash a business has, like securities lending or these fractional share repurchase obligations. They're the harder balance sheet. Now, this on this left side here is 2023, and I want you to see the difference, because the cash over this last year, their cash has only decreased by about 500 millis, and their current liabilities have moved up, and that's because their user growth is exploding, and that's before we really get into some of the serious juice of the business. So we've got a business that's got a good chunk of dough in cash. Let's take a look at their cash flow before we get to their net income, so we can see if that size is increasing or decreasing. In 2023, their cash flow increased by about 1.1 billies, but over here, we actually decreased by about 157 mil in 2024. And when we look at free cash flow, it's roughly about 170 mil. So consider this. You have a company with about $4 billion of cash divided by about 170. It gives you about 23 years of cash burn in a free cash flow point of view. So point is, really cash-rich company. And what that's enabling them to do, along with a stock that's moved up, is it's allowing them to invest a lot, in my opinion at least, in new products, features, and R&D. And this is what I think is really interesting, because if you actually go to their financial statement, even though they're coming out with all of these new features, which again, we're just gonna hit in just a moment, their technology and development costs have actually declined substantially from 2022. Off the top of my head, we're probably down about 8% from 2022, and we're only up maybe 1.5% from 2023 in tech expenses. Vlad has gone in here with a chisel and has carved this business to the nuts and bolts of efficiency. He doged Robinhood before Doge was a thing. They went from operation expenses of $249 million down to 112. This guy's a top G, and then he's thrown all of it into marketing, basically. Look at that. They almost 3x their marketing while cutting their operations expenses in more than half. It's pretty dang impressive. And if you look at G&A, their administrative side, you've also seen a collapse in the G&A expenses by a little bit more than half. That's pretty impressive. And that's one of the reasons they actually have earnings now. Now, what makes Robinhood so interesting? Well, it's like, to me, extremely profitable, first of all, on options and crypto. Okay, let's be real. Options and crypto, that's where these folks make money. Now, I'm not exposed to the stock, so it doesn't matter to me if it goes up or down. But I want to talk about Robinhood as sort of like the future of banking, because that's really the direction that they're going in. First of all, they have the cash to play this game. They've got about 12% of their companies in cash. It's about a $40 billion company. It used to be worth a lot less, during some of the pain of 2022. And I think there's a chance that can happen again. In fact, if there is a larger stock market correction beyond kind of what we've already seen in the NASDAQ, which is really nothing, right? We've had a little haircut over here. But if we get back into something like a 2022 season where you have, a year of downtrending NASDAQ stocks or 13 months, Robinhood will probably perform very poorly, mostly because they make such a bulk amount of their money on options and crypto, which both of those being significant risk assets and being tied to trade volumes will probably suffer in a recessionary environment. But I think that could be one of the most beautiful buying opportunities, along with Restoration Hardware, which is trading for like a half peg and is making incredible investments. They will get destroyed in a recession, stock-wise, but they are building a company of the future and I actually think a lot of this like, oh, it's so expensive stuff is going to go away for Restoration Hardware, because I think they're going to end up turning into like the Chip and Joanna Gaines of the Gen Z and millennial populations who move again once real estate gets moving again, probably, in a couple of years after we get through whatever this recession drama is or not. But Robinhood could suffer just like RH during that time. And I think it becomes a buying opportunity in part because what they're doing is they're trying to do what every single bank should be doing, but they're not actually restricted to the level that larger banks are. See, under the Dodd-Frank regulations, companies that are part of it, especially your big four, JP Morgan, Bank of America, Citi, and Wells Fargo, they're really restricted with a lot that they can do in terms of lending, a lot that they can do in terms of new options or features for their customers, because banking regulation is really, really tight. In fact, most people say you don't want to invest in a bank or own a bank. You want to use a bank. So you usually want to be separate from a bank. But fintech and lending has big dollar hollers. This is where you're seeing Rocket Mortgage tie up with a Redfin, and I think it's a brilliant deal, by the way. Very, very smart for Rocket Mortgage. They're getting Redfin at a steal, I think somewhere around $1.4 billion or whatever. I mean, it's a fart for the valuation of what Rocket Mortgage is, which is also about a $40 billion company. Another one that after the poopy doopy we go through should do very, very well on the upswing. But when you look at Robinhood and some of their latest announcements, this idea of delivering app to you, it's not about, oh, okay, you don't want to go to the ATM because you don't want to leave your house or your office or whatever to go pick up $500 in cash so you could go to the strip club later, or you could go on a vacation and you Uber basically euros to yourself or whatever. All that, like the service of this I think is brilliant. But what it's doing is it's showing that Robinhood is really like the financial app of the future. It's the app where you go to incorporate your net worth, your checking account, your savings account, your children's retirement funds. It's really marketing in a way that M1 Finance wishes they could market. In fact, a lot of what Robinhood's announcement was about, in my opinion, borrows from what M1 Finance has done for quite a while. This idea about, they literally took the pies idea to allow you or enable you to invest in these sort of like pies, right? And they'll sort of like auto rebalance these or whatever for you. This is exactly what M1 Finance has done for years. But Robinhood has the marketing. It's absolutely brilliant because I don't think that they're necessarily going to earn a ridiculous amount rapidly on fees, but I think they're going to get a lot of users using it, and as they get the AUM, the fees will be remarkable for the company. Because think about it this way. Robinhood's announcement is that if you use their, financial advisory services, which it's not like you're going to have a personal financial advisor. You can't pay for that with $250 a year of maximum fees. But what you've really done is you 5x the revenue for a gold customer. And remember, Robinhood makes a lot of money off options and crypto, but it's not recurring revenue. It doesn't get you through a downside. What gets you through a downside is that gold subscription. People forgetting that they're paying $5 a month for Robinhood Gold to get, their investing analytics or margin or yield on cash deposits or whatever. That's worth $60 a month. Well, $250 a month, or a year rather, that's worth $60 a year, $5 a month, $60 a year. $250 on top of that for sort of unlocking their advisory opportunities, talking like autofilling your tax return. Brilliant. Have a question, ask a CPA. It's sort of like Intuit support. They'll have to massively expand their customer support base, but they're the company that pioneered the 24-hour, I think it was the 24/7 call center. Have questions about how to trade options? Call them. Okay, do the same thing with taxes. Do the same thing with financial advisors. Just anybody who's an advisor can look at your stuff and give you an opinion. It's what SoFi has, by the way, done for years. SoFi has actually provided free financial advisors for years because the idea isn't to sell you financial advice. The idea is to get you to pay a little bit more per month, 25 bips of your AUM up to $250 max per year, roughly 5xing what Robinhood's revenue is off of you without you trading. See, they got the traders by the balls, as any trading platform does. Options are very profitable. Crypto spreads, very profitable. A lot of money to be made there. But there's a limit to how much people are going to trade in a downturn. There's a limit to how much people are going to trade in an upside as well, because not everybody trades. But getting that long-term investor who's just going to park their money in your app and sit there and not realize that that $300 or whatever a month you're paying, compounded by, many millions of users, is brilliant. Like this is so smart for not only the downturn times, but also the long term. JP Morgan wishes they could do an app like Robinhood. Can JP Morgan buy Robinhood? I mean, JP Morgan, not that Robinhood would ever be open to it. JP Morgan is a $700 billion company. JP Morgan should buy Robinhood. Honestly, but I don't know. Once that happens, then all of a sudden you have a bank holding company owning a fintech, and you ruin all of the fintech aspects of it anyway. So they can't. The regulators have JP Morgan by the balls, where Robinhood can do whatever they want in the fintech space, but they're not screwed by a bank holding company. Kind of brilliant. So Robinhood is really uniquely positioned for this next downturn. Enormous amount of cash, rigorous discipline and cost cutting, and these announcements over, investing into various different exchange traded funds that they auto manage for you, talking to a tax advisor through the app included in this, net worth reports, spending controls for your children, starting the process of creating a trust right from the app. Brilliant. Send cash internationally through the app to friends on the app. It's sort of their version of Zelle. Brilliant. It's like the blue text message for fintech. Book travel, drivers, tickets through the app, whatever. That's a little bell and whistle. Nobody really cares about that. But what Robinhood's missing right now, and if I had a message to Robinhood, it would be you really need to get into business accounts. And then after that, you could, expand your lending opportunities, like credit lines for businesses. But I think there are a lot of small businesses out there right now, especially in this moment in time where people are suffering, that would love a new banking relationship like what Robinhood offers. And so for me, it's not a buy at this price, but boy, if they get cheap, again, which I think they will if we go through this economic poopy-doopy that I think we're going through or about to go through, I'm pretty excited about the company. The company itself, fantastic POV. Let's do a valuation on them quickly. The valuation of the hoodles. So right now we're sitting at 39.2 billies. We don't have a cash concern. We love their pricing power. I'm always a big fan of the foundations, right? No bankruptcy risk, pricing power, and then a low valuation. And I like to be in a position of low enthusiasm. We're in a low enthusiasm time. I think we'll be in a much more low enthusiasm time when folks start realizing, crap, we could be in for an economic slowdown that's worse than expected. I hope not, but it could be. But as far as the valuation right now, if I look at their $1.47 of projected income divided by the current price, $44.27 divided by $1.47. Come on, Kevin. $44.27 divided by $1.47 puts me at 30 times. And the growth that the company is expecting, Wall Street is not seeing the growth. I think Wall Street is way discounting this growth for this company. They only see 26.4% growth over the next 4 years. That works out to 6.6% on a growth rate. That's crazy. That's so low for this company. I don't buy it, but that's what is currently estimated. Puts the company at 1.73 divided by 6. It's trading for a 4.2 peg. So right now on a peg ratio basis is ridiculously overvalued, partly because Wall Street's estimates are very low for it. But the point is, when with those low estimates, Robinhood stock aligns with like a 2.4 peg. So if it's trading for like $22 or less, whew, this is the bank of the future, especially with the regulatory tailwinds that the company has. Thanks in part to Trump's deregulatory push. Like Trump's deregulatory push really won't become evident probably for the next 4 years. Like the seeds for the next deregulation bubble are being planted now. I agree with Musk, we're overregulated now, but the seeds of the next 2008 are being planted now with the deregulation that's coming. I don't know what the consequences of that could be. You know, in 10 years, we could talk about a recession again. We still have to get through this one first. Maybe. You know, I'm like 70% on it. But boy, this, I have to say, Team Vlad, Team Robinhood, fantastic job. And out of the other finance apps that are out there, there's some that I like. You know, like Public's gotten really good. They're giving Robinhood somewhat of a run for their money. SoFi's incredible. Still torn on where I stand on like the Moo-Moos or whatever. M1 Finance, I wish they could market themselves better. There's so much opportunity there, but because that's a great application as well, and they're doing great things, but nobody knows. I don't see any. Where's their marketing? So please call me so I can help you. Or I'll privately give you my opinions. You don't even have to pay me. But I feel bad M1's getting left behind. But anyway, very cool. So some of my thoughts on Robinhood.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.